Welcome! If you've clicked on this video, you're tired of the noise. You've seen the get-rich-quick videos promising overnight millions, but you're still not profitable. Trading isn't about luck or guessing. It's about a rigid system that prevents you from destroying your account. Today, I'm giving you the 5 foundational rules that changed my path from losing money to consistent growth. If you follow these, you will have a massive edge over 90% of beginners who start today and quit tomorrow. Let's build your foundation. Rule 1, trading is not gambling. When you trade without a plan, you are handing your money to institutions that do have a plan. Most beginners enter because they feel like a stock is going up. That is a death sentence. A real trade needs 3 non-negotiables: your entry trigger, your risk to reward ratio, and your hard exit condition. I keep a trading journal where I write why I'm entering before I click a single button. If you can't justify your trade in writing, you have no business taking it. It's better to miss a profitable trade than to enter a bad one. Rule 2 is the heartbeat of trading: risk management. If you lose 50% of your account, you need a 100% gain just to get back to break even. That is why professional traders are obsessed with their stop loss. I use the 1% rule. I never risk more than 1% of my total account on any single trade. If I have a $1,000 account, I lose $10 and I move on. It's a boring rule, but it's the only reason I'm still here while others are blowing up their accounts. Trading is a game of probability, not certainty. Protect your capital so you can play the next hand. Rule 3, candlesticks are a language. When you look at a chart, don't see random lines. See a battlefield between buyers and sellers. We focus on support and resistance zones. These are price levels where the market has historically shown interest. I look for higher highs and higher lows to confirm the trend. If the market is making lower lows, why would you buy? Never fight the tide. You have to wait for the market to come to your zone. If the price isn't at a level where you have an edge, stay on the sidelines. Patience is the greatest indicator of all Rule 4. Stop the screen time addiction. Many of you are glued to your monitors for 8 hours a day. That leads to decision fatigue, and that is when you start making mistakes. This is where AI tools become your secret weapon. I use AI-powered scanners to identify high-probability setups across dozens of stocks simultaneously. Instead of me staring at charts all day, the AI alerts me only when a setup meets my exact criteria. This keeps me fresh and disciplined. You don't need to be in the market all the time, you just need to be in the market when the best setups appear. This is how you trade smarter, not longer. Rule 5 is the hardest: mastering your psychology. You will face FOMO, the fear of missing out. You will face revenge trading after a loss. These feelings are human, but they are fatal. The market doesn't care about your feelings, and it certainly doesn't care about your losses. The only way to survive is to stay detached. If you feel your heart racing or your anger rising, close the laptop. There will be another trade tomorrow. Your mental health is the most important asset in your portfolio. You now have the roadmap. The work starts now. It takes patience and discipline. In my next deep dive, we are going to do a full masterclass on technical indicators and how to read chart patterns in real time. Make sure you are subscribed and your notifications are on, because that video will change your entry strategy completely. Check the description for the tools I personally use to scan the market. I'm here to help you get professional. I'll see you in the next one.